Another week, another trading cycles video. We are now in week 28 of the year 2023. Before we go over kind of what we expected to happen on the markets this last week here, what we predict might happen in the next upcoming week or so, I do want to preface, as always, that you should keep in mind we do not provide financial advice. All the content that we share is intended for educational purposes only, and always trade the price and not the prediction. How are you doing, Gormas?
I'm doing good. Thank you very much for asking. Nice to hear you again, Eric, and good to have you, all of you, back as well on this channel. So let's have a look what has been happening. Obviously, summertime is always a bit lazy on markets, so lots of investors are taking time off, and obviously the volatility is fairly low in these months, but still we got some patterns in play which are quite predictable, but not always, obviously. So let's see how our turning point predictions firstly have played out. Now, the last one we spoke about was on 30th of June, yeah, and that played out quite well. So that was quite sharp turning point here, yeah. So market topped there and now has been declining. We're talking about the S&P 500 here, yeah. Okay, and then the next one was on the 6th, last Thursday, which gave a bit volatility there. Market dropped quite heavily there, but obviously it has kind of continued its decline now, yeah. And another one is coming up here on this Thursday, on the 13th. Yeah, so that might be a bit more important in our view, but let's see how it's going to play out. Obviously, one important thing to bear in mind is that another season of earnings is starting this week. So that's obviously always interesting to see how it's going to play out. Firstly, as always, the big banks are reporting their earnings. And we have spoken about it before, but we believe that this year should be quite favorable for at least bigger banks, as Jupiter is moving through a sign of Taurus, which has always been kind of favorable for institutions who deal with money. So, and also for food industry, obviously it doesn't always mean that there's going to be plenty of food. There might be shortages or prices will go higher, as we've seen already. Yeah? So obviously they will take their cut as well. So that's how their profits are raising, and therefore also the stock prices are getting higher. Okay, that's the logic behind it. Yeah. So. And yes, so that's let's have a look now how the seasonality will predict the market movements from here on. So there is not the standard seasonality model, but slightly optimized to the markets, and it's done on the Dow Jones index, yeah. And from here we can see that it kind of picked up the March low when we had this banking crisis there. And after that we have seen quite heavy raise in the prices. There have been some corrections, which everyone can obviously compare to the market. They did pick up these buying opportunities quite well. So at the moment we are in this area. And it seems like markets still have some power to rise, at least in the first half of July. So far we have seen falling markets, but they might pick up since the earnings season is starting. The thing that is kind of concerning us is that in the end of July, I think 25th, 26th, is another Fed meeting, and there is supposed to be the last decision on rates for this summer, because next meeting will be in the end of September, I believe, or second half of September. Yeah. So, and seasonality pattern is showing us declining trend from here till another Fed meeting. Yeah. So hopefully Fed is not going to scare everyone off, and markets will start falling. But yeah, we'll just have to wait and see. Maybe it's something else in play. We don't know, obviously. We only see what cycles are telling us. And obviously another cycle that has been working quite well is Mercury cycle. So that's a planetary movement cycle that's now adjusted to the market price. And as we can see from last October, it has been following those tops and bottoms quite well. Not perfect, but still fairly good. And that cycle is suggesting that the market will start falling from here on. Yeah, so there should be another bottom somewhere in the first half of August by that cycle. Yeah. What else? So another thing that we have already pointed out quite many times is the analysis of VIX index, this fear index, so to say, which has been working quite well. So we did see that March bottom, which was a peak on the VIX, obviously, because VIX works in like a mirror. So when the market is falling and the volatility is rising, then VIX is going higher. Yeah. And what we're going to see here now is that from the second half of July, the VIX is going fairly high to the heights that it hasn't been so far in this year. So that also implies that the market might start falling, and the fear is going to come back to the markets, yeah, and volatility will rise. And that's kind of going to last until the end of September again, as our seasonality pattern was suggesting there. Yeah. So there are some factors in play, and also obviously the valuations on the market are quite high, so quite unreasonable if we bear in mind what kind of situation we are in economically. So although the job market is still high, and that's what scares obviously investors, because if Fed sees that the job market keeps obviously being that strong, then they might raise the interest rates one more time before they go on the longer break there. Yeah, and that might scare off obviously market participants there as well. Yeah. So we'll just have to wait and see what's going to happen. And as we see from here, the greed index, fear and greed index, has been on its highs as well. It's still in extreme greed area here. Another factor that might suggest that markets will start turning soon. It's quite cyclical index, and it goes up and down quite regularly. And now it's been overextended already. Quite a bit here. All right, and then there's a factor of yield curve. If we look at the longer view, so we can see that the yield curve has been negative usually before there has been recessions, economical downturns. It happened before the dot-com bubble, and it happened before financial crisis, which everyone should remember now. But it has happened before as well. So late 80s, it was the case, and then there was another recession following, and it was early 80s as well. And as we can see, as the yield curve has been quite heavily inverted back in 80s, it is also this time quite heavily. It hasn't been that low in the previous times. So there are some similarities, and we also saw very high inflation and interest rate rises back in 80s or early 80s. Yeah, so these times are quite similar in that sense. So I guess we will have some sort of recession coming still. That's quite indicative now that something is gonna change in the economy as well. Yeah. All right, so not good news, obviously, but at the moment, I think the markets are still very optimistic. And yeah, one more factor that we need to take into account. So there has been very good indicator, which is called divergences, which means that, well, if you look at the momentum divergences, for example, it means that in price, when price has been making higher highs, for example, like this S&P has done, so the last high on the 30th was higher than the previous high on the 16th. And on the momentum indicator like MACD, for example, yeah, it has been opposite. So that one has been higher, where the price was lower, and the last one was lower and price was higher. So that's the divergence here. And usually these patterns are suggesting that markets will start turning. Obviously, it can be false. So if that high will be broken, then it was false. So if you see prices higher than, let's say, 44.65, then yes, it was false. So it's not in play. But at the moment, it is quite strongly in play. So market has been falling since the last high. Yeah. So yeah, another factor that's kind of suggesting that markets will start correcting from here on. All right, so I think we will conclude it at the moment, and let's see what the earnings season will bring us this time, and then see where the markets are gonna head from here. All right.
Of course. Again, this is just sort of these are just indicators. We're not saying that this is what will happen. You just kind of keep an eye on these kind of things and make your own decisions, make your own research. But there are signs that bigger things are coming. So keep that in the back of your head. But yeah, thank you very much, Urmas, as usual, and thank you for watching and listening. If you haven't already, click that subscribe button. Click the bell notification icon so you get notified when we upload next. If you like this video and you're watching it this far, just smack that like button. If you have any questions or ideas or recommendations, anything like that, that's what the comment section is for. We're happy to respond back to you and maybe incorporate your feedback or your comment into our next video, so don't be shy. And share this video with your loved ones. Share this video with anyone you feel like might find the knowledge and the content that we share useful. But that's it from me. Thank you very much once again, and we shall see you in the next video. Bye bye.
Exactly. Have a good week. Bye bye.